Hi, everyone. Welcome back to the Friends of Mortgage Heroes show. I'm Andy, and today I have with me Daniel Tromello. And actually, there's a crazy story that I'm going to get to in just a second after I introduce Daniel. But Daniel, thank you so much for coming on the show.
Thanks for having me, man. I'm stoked to be here.
Well, so Daniel was introduced to me by another guest of ours, and if you are unaware of who Jessie Wright is with San Diego Real Producers, she was just on the show a couple weeks ago. You can go back and watch that episode after we do our interview here today. But I'm so glad that Jessie trusted me enough and trusted you enough to be like, hey, I want these guys in my inner circle, because she's doing really great things at San Diego Real Producers. I love it.
She is. Yeah, I moved to San Diego 6.5 years ago, and one of the people that I met very early said, do you know who Jessie Wright is? And I was like, no. And it was like within like a month, her name came up of me just being in a real estate community of San Diego. They're like, you got to go to one of her events. You got to meet her. And I was like, okay.
Wow.
Great. Yeah.
What a great, point you in the right direction, right away.
Yeah.
And wow, what a shotgun, start, man.
Yeah.
So to set the stage for our conversation today, I would love to read out your bio here and a little bit about you to kind of set the stage for all of our audience today. Daniel Tromello is a leading real estate investor, speaker, and sales strategist in San Diego, voted San Diego Investor of the Year, and recognized for best operational staff. He has launched multiple successful companies, managed over $700 million in investor capital. That's a lot.
Yeah.
And acquired more than 700 properties. Also a lot. Yeah. As the CEO and founder of Resolve, Daniel leads one of San Diego's top real estate investment firms known for solving complex transactions, unlocking hidden property value, and funding investor opportunities. Resolve is a go-to source in the distressed housing space, serving as a trusted cash buyer, builder, lender, and wholesaler. Daniel's passionate about educating and partnering with real estate professionals to navigate creative real estate deals with confidence. Daniel, welcome to Friends of Mortgage Heroes.
Yeah, thanks for having me on here.
Man, that's quite the rap sheet, dude.
It is quite the rap sheet. It's kind of weird when you say it out loud.
Because I think some of the, on the surface, people go, wow, that's a lot of money. $700 million is a lot of money. 700 properties sounds like a lot of things. Yeah. How do you keep all that in this contained space of confidence?
Good people, number one. So very early, I kind of knew to remove certain things from my plate that I wasn't either the best at, or that I knew I needed to move off my plate to grow the business. So, for example, I don't underwrite my own properties that I buy. I'll definitely be final pass on them, but if you're submitting a loan to an underwriter, the underwriter is the final decision. Your job's to package it and get it over to them the way that you think it probably works, and then maybe you battle them as you should. I run a very similar business where I remove a lot of things off my plate, like valuations and things like that. They can remove emotional buying and reasons and whatever. To me, it removes a lot of impulsivity and allows me to make better decisions.
That's so interesting to me that you mentioned impulsivity, because it's very it's uncommonly mentioned, but it is a common problem with people who are trying to, let's say, force an outcome. Yeah. Usually the culprit that's not named is the impulsive nature of the behavior.
100%. Exactly right. So, but because there's such a finite amount of these opportunities out there that actually make sense and make money, people think, just because it needs work, for example, you can make money on it. But if you buy something at 100% of value, you don't have any room for anything, refinance, so you don't have any short-term play. Your long-term play is very speculative based off the market. And so people but they run such small numbers that they think the next one that comes across their desk could be the reason. That's the reason I got to buy something, because it's here and it's available. And what I say to investors all the time too is, just because you can doesn't mean you do. And when there's a lot of capital out there, which there is right now, there's also a lot of ignorance. And so ignorance makes ignorant and impulsive decisions, unfortunately.
So do you feel like you were able to start this story journey in a way where you were kind of, I was gonna say insulated from that, but did you have to learn some of that lesson the hard way, or were you kind of buffered a little bit from making a lot of wrong choices early, and you just knew, I'm going to be a little more conservative in this and realistic about that? Tell me about your the early part of your journey in getting to 700 million in capital and 700 properties. I know what it looks like today is probably not what it looked like when it started.
No, it's a learned behavior. Everything else is a learned behavior, right? So when I first started, I didn't know if a deal hit me on the side of the face, I couldn't tell you what made sense, what didn't. I didn't know. But like what I did know is that people that are doing it at a high level had, they weren't any smarter than me. They had more education than I did. Right. So my first property I ever bought was like maybe this probate deal that was maybe $50K below value, for example. I would never touch that house today, for example, but it was a good, I got in undervalued. And, and in relation to value too, it's value, the purchase price is related to the current value. So like when I say people buying at good or bad prices, it's all related to the current value of the property today, right? So I understood that quick. And then when I had the opportunity to take over, it was like field operations for a hedge fund and I was working with very smart institutional capital. I did learn, what's a good deal, what's a bad deal at a much higher amount of scale. And the rest was just going through transactions and deals and different types of opportunities and learning that at like almost is truly water through a fire hose type thing.
So now I have several new questions.
Yeah.
So this probate sale you're talking about, what at that time in your life, what made that look like a good deal? And now retrospectively you'd say, it probably wasn't the best deal.
What made it look like a good deal was the agent I was working with told me it was, honestly. I didn't know what a comp was. It was strictly 100% trust, 100%. I didn't know where to find values. I didn't know anything. I was in financial planning, and in financial planning, you don't learn anything about real estate. You don't know anything about it. You don't even know any of the vocabulary. Is kind of similar, but that I didn't know. So I was working with a good agent who found me an opportunity that was a little bit below value that they partnered with me on. So they put their cash in there as well. So then I was like, okay, so if they're putting in, I'm putting in, which was all my money, which is like next to nothing at the time, then it must be an okay deal, Mm-hmm. And that was my first ever buy.
Wow.
Yeah.
And so clearly what I'm picking up is that that's certainly not the way we make decisions now.
No.
And so I want to go back to the hedge fund thing though. So when you were doing field operations and you learned this, I'll say elevated method for identifying what's a good deal, not a good deal. For people who are new in this space, they may not be aware that a lot of those decisions are made on spreadsheets or some of them. But those who are in this also know there are similarities in our decision-making process as investors, but there's also nuances. Like I have a friend who, if I can't drive to it in half of a day from where I live, I don't want it. That's one of his rules. Okay. Now, does it have to hit all the marks on the box on the paper? Yes, it does, and also this. So there's these levels of nuance. So what's something that you learned going through that experience in life with the hedge fund where you're like, oh, this is a much more either refined or mature way about looking at an investment strategy for real estate?
I wish I could say more. So the one I learned, what I tend to do when I'm in environments like that is take away things that don't work as opposed to only looking at things that do work. So things that do work are pretty obvious. If someone buys something at 50 cents and it's worth $1, that's pretty obvious that that's probably a good purchase, right? The question is, how do you assess whether it's worth $1 or not? Well, okay, you have appraisals, you have ARV, after renovation value, you have data. So unless there's data there, so I learned a lot about how to understand data. So I learned that side. And the other thing is, and this is what I learned separately, but when you are investing your own money, right, or investors other people's money, your ability to make smarter decisions is completely amplified when it's other people's capital, because now you're on the hook for returns, you're on the hook for and so you better make prudent decisions and you better stick to those decisions. And that's what I learned, I think, like from a better way as I started my own business, was how to deploy capital in the right way, give the people the right returns, and something more prescriptive and less speculative, where that was really beneficial. Beyond that, I did learn some business structure, but ultimately, like I refined and built the process so much differently, where it made made more sense, at least from my perspective, where from the business as a whole to actually grow it. Because it's very hard to grow a flipping wholesale business because there's so much field operations attached.
Yeah.
So much. It's not like mortgage where you can originate a loan in Texas tomorrow.
Right. Yeah.
And so it's a little bit different. But So yeah, I guess that's a long-winded way of saying I learned a lot of different ways, but I also learned what not to do. But honestly,
Yeah.
which is getting out over your skis, doing too many things, trying to be too many things to too many people, versus really staying true to your model.
Wow.
So if you're not staying true to your model, the hard thing is, here's the very hard thing. It is relentless amount of work. It is so much harder than you ever anticipate it'll ever be, because there's so few of those opportunities out there. And so because when you have loose money or hedge fund capital, people can overtrust people, and they say their impulsivity can set in. You deploy it because you feel like you have to deploy it. And I've watched these people just lose a ton of cash because they didn't stay prudent to their model. And what they do is they end up thinking that, well, I can push these things and I can put them in different, and it doesn't work that way. The amount of work it takes and volume it takes is significantly higher than I think most anticipate in what we run.
So there's an old adage that says if you're ever going to embark on a construction project, it'll take twice as long and cost twice as much.
I mean,
is that I know it's an oversimplification of what you're describing, but is there a fine line in there where it's similar in the hedge fund space?
There's a fine line. I mean, when you're buying at scale and doing the amount of flips that we were doing then, but I'm doing enough now. I say enough volume now where things can still happen, but like ultimately, of course, construction is never going to be what you think it's going to be. And of course, flipping is a very speculative business. And I think people look at it as an investment. It's a lot of speculation because you're speculating on a value at a future date. That's speculation, period, no matter how you slice it.
Yeah.
Where the market was going upward, people believed their own BS and really thought they were that good, as opposed to really refining those skills. Because you can uncover problems when the market's appreciating as fast as you're making problems.
Yeah.
Because then you can still get out of those transactions. What you're seeing now, for example, is just like the cream is rising to the top because a lot of dumb money is now stuck. They got over leveraged. They didn't know what it was. So smart money, meaning like can construction come up and down? Of course it can. You have to make those decisions, but it's always planning the exit when you come in. And if your acquisition price is right, you can weather the storms of construction, of course. So yes, long-winded answer to your question.
No, that's great because there are people that tune into like this show and other parts of the conversations that we have in and around Mortgage Heroes. Not just about mortgage and real estate, but specifically investing and developing. Because in San Diego, like ADU is like the gold rush of our day, and people are trying to jump in still. There's people that have been in this a long time before it became like sexy and cool. And like they've been like you taught someone who said, "Oh, I've been doing ADUs for 15 years," and some people go, "You've been able to do it that long? Like, what do you mean? Wow. I thought this happened yesterday, right?"
Yeah, it's great.
But it's true. There are people who've been around a long time doing this.
Of course.
And I think that people are so focused sometimes on the outcome that they overlook the process and how difficult and complicated and detail-oriented it has to be in order for it to work right.
You're right.
Otherwise, it seems it can give the, I guess what I'm trying to summarize here is it can give the illustration that it's just dumb luck and it always works out, and it's not always the case. There's a lot of precision and focused attention that has to go into things working right in the end.
100%.
So how have you been able to do that at these different levels of scale when volume can be the biggest threat to attention span? How's that something you've been able to manage as you've like matured into your career in this?
Good people. I will go back to that. So I have it's a few different things. I've never been asked that question before. But when I first started my model, I learned that I could trade off properties without touching them quickly. So I can trade off a property without touching the property. Whether we don't do a lot of assignments. We do some assignment of contract. It's very rare. We do a lot of purchase and resale, wholesale on the market, or wholesale to another investor, or we fix and flip, whatever. So I learned how to de-risk the model very quickly, and I look at it as trading. I can either trade it today, and take the quick nickel over to slower dime. Okay, I'll take that. What's my risk? What's my exposure? What's the area? What's the target? Where's the business at? What do we need? So that, to answer the question, is like, if I have a really good acquisition strategy and I built this back end engine with a couple thousand investors who are wanting properties that we're willing to sell, and I can bake in margin to unload it, I can effectively not like a mortgage professional, for example, but I can grow it in different markets that I'm not in, or I can grow it in areas that I don't really want a principal. So it allows me, and because of that, because of now, so it allows me to trade off properties that are unwanted or unneeded, or there's margin that's bigger than, the short-term margin is better than the long-term play, regarding all the field operations. And so then I can be very picky on the ones I want a principal take on. What's my appreciation like? What's the bucket like? What's my target? So that's how. What's my construction like? How many teams do we have going? What's the feel of them? What's their sentiment? How many, so those things matter. So all of those I'm very sensitive to.
Wow.
And number one, the business comes first. So I could have this incredible project that we could make $1 million on. But if it's going to take my attention away too far away from the golden goose, which strikes every day, it's not worth it. Make sense?
Yeah.
And
like
so I never get emotionally attached to this long-term I have this long-term outcome, but I have to make sure there's short-term decisions along the way that lead to the long-term outcome,
right,
that are beneficial for the ecosystem of the company, right?
Yeah, yeah. No, I totally get that. I mean, I grew up playing baseball, right? And there's dudes on your team that are going to hit the grand slam once a year.
Sure.
But then that doesn't mean you trade away the guy that's hitting 2 for 3 every game and getting doubles and singles.
If there's anything I can say that, you have this number, 700 houses, whatever. I don't know how many loans you've originated, 10,000 loans, right? It's your point. It's the consistency that builds let's say the wealth, not the one-time thing or the two-time thing. That can happen. Those people are out there, of course, but it's the daily consistency prescriptive model that works. That's the business.
Yeah.
That's what we do.
And I hate to oversimplify it once again, but being a guy who loves baseball, the dudes who are swinging for the fences also strike out the most.
Yeah.
And it's I see that in business a lot too, where you're just trying to hit home runs all day long. You're going to be looking at strike threes. You're going to be swinging it and sitting down on the bench again. Not to draw too strong a parallel, but when I was growing up as a kid here in San Diego, I grew up in the era where Tony Gwynn was the guy, and he's winning batting championship year after year after year, and you're like, there's something to that. And what's funny is when I got older and I started learning more about him. And eventually got to work with his family at another point in my life, which was super cool. But he's like, I hit off the tee. And it's I'm not too cool to still, I'm going to hit off the tee. That fundamentals, footwork, body positioning, speed, rotate, all these things that go into being a successful average hitter, hit for average versus hit for the fences. And there's just such a great story in that for business people. Yeah. And so you mentioned the hedge fund part, you mentioned having capital, you mentioned having properties, you also mentioned financial planning. Yeah. And having come from that game where, hitting for average matters a lot. And you can have a home run now and then, but a lot of times when you're under
average.
What's that?
That's all it was how do you get people from not having a retirement plan to having a retirement plan? How do you get people from not having to reverse mortgage their house because they could afford long-term care insurance, for example?
Right.
Or how do you get people to take a little bit of money to last their lifetime? Or how do you give them a small tax-free retirement? That's what it is. You're just basically trying to build the average American's nest egg. That's what financial planning is. I mean, you're not dealing with, everyone wants to go after and have institutional capital but they're not going to come to you because they're not going to invest in your ABC mutual funds. You know what I mean?
Yeah, I get it.
They own those funds.
Yeah, they own they own buckets of those.
That's
funds.
correct. Yeah. So that was the model, and so I learned. That's where I learned. I learned about money. That's where I learned about money because I didn't grow up learning about money, and so it was that was an example for me to learn about money, understand where it comes, what does it mean, what does it do, what's the and so it was a good experience for me.
Well, let's talk about that a little bit because in our pre-interview call with each other, this is actually where we revealed and found out that someone who has been a part of my life has also been a part of your life, and we just these intersections just collided in that conversation. Yeah. So back in your financial planning world, you were with Rusty Hood.
Yeah, Rusty Hood.
So you were with Rusty Hood for 7 years, right?
Yes, about almost 8 years.
Almost 8 years. And so when did that start, and then when did that end?
So I was about 26. I was a football player, and I was my whole world. Football player, and I thought I'll be playing football forever, and I didn't know what to do. So I interviewed at this, I finished playing or kind of retired, I guess you could say, or teams didn't want me anymore. I was like, man, my wife was an athlete in college. She said, hey, like there's this company called Athletes to Business. They're a recruiting company. And I was like, that sounds good. Like, I don't want to, because most athletes, they end up going into like coaching or training. And I did some of those things, or they end up in like selling medical device stuff. Right. I was like, I don't want to be in healthcare, whatever. And so I ended up recruiting, and I was recruited to a company doing financial services. And then I go to within a month, I realized the person that was going to be teaching me there, I'm like, I don't want to take this guy to like meet people. He wasn't the best. I didn't know. I went and got my license. And so I'm at a party, and I run into this tall guy, and he's 6'5", he's got a big personality, right?
Yeah.
And his wife was currently working out in my brother's gym, and it was kind of like, hey, like, he's like, hey, what do you do? I'm like, I don't even know what I do, but I just got my insurance license.
I'm here talking to you right now. That's what I do.
And that's how I met Rusty. And so he brought me over, and I started working with him, and it's probably legitimately, and one of the hardest working people I've ever met in my life.
Agree. Yeah,
Honestly.
almost to a fault. I'll say lovingly, Rusty, almost to a fault.
I mean, he loves it,
Absolutely. There's no question about that.
Yeah.
And it's not that I think it's more than just he loves it. Like, he loves what it does for people. And maybe that creates like this little reciprocation thing where it's like, oh, I love what I do. I love what it does for people, which makes me love it even more.
Yeah. But that's how, and for me, he was a really good person to work with. He's the only person I knew at the time that was making at least over $250,000 a year that was willing to teach me.
Yeah.
Looking at it now, of like, but I'm like, wow, that was, at the time, it was like, I couldn't think of anyone better I could work with. And a lot of trial by error, a lot of failure, a lot of mistakes, all those things, but like tremendous learning experience. And then right around, I moved to San Diego. I got an opportunity to take over a hedge fund in San Diego. That's what kind of brought me here 6.5 years ago. So I worked at him between 26 and like 32, moved here, got into real estate investing. I mean, at scale. I'd been buying stuff up there, but nothing like when I came down here.
Yeah.
And started my company just about 8 months after coming down here.
That's so wild.
Just jammed. But it's a small world, man.
So we start talking about this, and I'm all, Rusty was my college roommate for 2 years at Pepperdine. And I don't know if I shared this with you or not. My sport was baseball, and I also played drums, and Rusty was volleyball and tennis. And so we were roommates, and he'd be like, hey, come, let's go hit the ball. Let's go hit the ball at the courts for a little bit. And I played tennis like as a hobby. Like, I'm not good, right? And then he like interests us in this like intramural tournament.
That's funny.
And I'm like, I don't know how to really play tennis, dude.
Kicked out here.
And we ended up, I don't know if we got second or I don't know. We were in the top 3 somehow, but not somehow. It was because of Rusty, not because of me. He's like, hey, just serve the ball over, and then we'll take it from there.
Yeah.
So I just somewhere in like my archives, I have this picture of us like holding this trophy down at the tennis courts, and I'm like, and I still had hair back then.
I love it.
And Rusty's got, we always used to tease Rusty, man. That dude's got a huge head and a lot of hair.
He does. He still has it too.
I was just like in shock when we connected before in our connection call. Like, crazy. Oh my gosh, Russ, there's no way.
Yeah.
Because I don't just run into people here in San Diego that know someone who I spent 2 years of my college life with every day. That's insane.
It's nuts, dude. It's a very small world.
But I can understand also, because of knowing him in that, like, before he went in to do all that stuff, like, the guy was already on it. He was, like, learning and studying and practicing business. He was practicing financial planning. He was so he was already, like, carving out this, like, course that then your roads collided in at 1.2. Yeah. And it doesn't surprise me at all that that you were there for that long and were able to learn all the things you had and be, this is how money works, this is what money is how it moves and all that. Like that 100% lines up when I know who you were with.
Yeah. And then, other big names in that particular organization at the time, like a lot of people, Ed Milet's become very famous and popular, but we were working under Ed Milet for the same amount of time. Yeah. And so you have people like that.
Everybody knows Ed Milet.
And now they do. At the time, it was like, I remember hearing him speak and be like, this is probably the greatest speaker I've ever heard. Yeah. And at the time, too, I was so young, and like the messaging was so important for me as like a young athlete and those types of things. And that was a big personal, like for me at that time, personal development was all I spent my time doing. I mean, I got a TV out of my house. I had this little tiny apartment my wife and I lived in, and we were barely making it. We were freaked out we could even afford it. I just had goals everywhere, and he actually gave me hand-me-down couch to have in my house. Couldn't afford a couch.
That's amazing.
Yeah.
Are you for real?
I swear. Yeah, I mean, honestly, we could barely afford $14.50 a month in our one bedroom.
And he's like, here's a couch,
Yeah.
man. That's so, I love little stories like that.
They gave me like a chair. They gave me stuff for like my living room. I didn't have a TV.
Dude, I'm so glad you're sharing this. I'm so glad you're sharing this, because people think that, because if you don't know who Ed Milet is before you know him now, you're going to miss all these little things that have happened along the way, because sometimes those stories don't get told. I didn't know this.
Yeah.
You didn't tell this to me when we were on the phone.
No, why would I?
Why would you, right? But it's coming up now, and I love this. Was one of the coolest things about this show for me is, even though I might know someone a long time, I still learn something new about them, or I'm meeting them because of another connection, and I'm learning something that's connected to Ed's generosity. Yeah. Like, that's super cool, man.
It was Rusty and Bridget that gave me that, but a lot of it was through them. You know, I was working.
Oh, I'm sorry. I thought you were saying Ed Milet gave you a couch.
No, he didn't.
I understand Rusty giving you a couch.
Yeah. But either way, I mean, you know, like, those things you never forget, right? Obviously. And like, you know, there was a lot at that phase of my life that I was just so reactive to. And I was just very, very, even though when I finished football, I was about 26. I was probably 18 maturity wise. I never had to, you know, like, put gas in my car, really. I never had to like buy toiletries. Like, all these things were given to me for a long time. And so what's very difficult about but I was incredibly resilient. But like, when I would say, when the blanket is pulled off of a lot of ex-athletes or ex-military, those things, like, it is raw and it's terrifying. And it took me about 2 to 3 years to like even gain traction to even try and become what I wanted to do. And I don't forget those times. You know, I really don't. And like, that, I think because I didn't grow up affluent, or didn't grow up with resources, grew up with all this money. I didn't grow up with those things. I definitely grew up middle class, had a great family and great parents, all those things. But because I didn't do that, I've always said this to people, is I've always felt, and I talk to investors now, I don't feel like the money, I don't feel like I own any money. I feel like I rent it and I use it and I deploy it, because I've never attached myself to it. I can use it. And I think that, like, I don't know. I don't know where that came or what that started or how that ever happened. I don't really know. I'd be totally frank. But it's allowed me to deploy it and use it for things that are growing and all those things. And yes, you can give back and all that. I just never felt like it's mine.
So you mentioned, you know, the blanket being pulled off and like you're freaking out. Yeah. Essentially, you know, I know that a lot of people are this is maybe ironic to say it this way. They're afraid to say they're afraid. Yeah. And it's like, it's an ironic kind of statement to make, like, but then being confronted with the reality of, oh shoot, I'm on my own, I have to go do all these things, can leave you feeling a little bit like vulnerable and like naked of your talent. Like, whoa, how do I do this? And where do I go? And what's so fun, or not fun, what's unique to me and fun in this environment is seeing the line that goes from that starting point to this success point over here. Yeah. And none of those journeys are without like hard work, dedication, perseverance. Yeah, those are some grit.
Those are there.
And but I want to ask you, like, how much of that would you attribute to what you learned in football? Like, because you're getting resistance, whether you're on offense or defense, there's resistance to whatever you're trying to do, right? Oh. You got to be strategic, you got to be strong, and you got to have your head about you, but you also got to like make the play that's being called. So how much of that would you attribute has translated into this success path that you've had?
I mean, when I first got in, I'll say it this way. When I first got into business, I couldn't believe how weak people were, because I couldn't believe that showing up on time was like even my first day of of financial planning, for example. This is at the previous company I was at before I joined the other one. I show up at 8 o'clock in the morning, no one's there. I didn't know you weren't supposed to show up at 8 o'clock in the morning. I just showed up at 8 o'clock in the morning because that's when you show up. And so I texted the broker at the time. I was like, hey, like, I'm at the office. He goes, oh, I got to get you a key card. I was like, what do you, okay. Like, aren't you not here? So, okay, there's an example, right? So I didn't know what I didn't know, but I did realize that, when I was also a personal trainer too. So I did deal with people that, you know, and they came to train and all that. And I did CrossFit very competitively and semi-professionally after football. I just was need. So if it was visceral for me, I could see and feel the growth. Yes, when it came to sports, discipline mattered, teamwork matters, leadership matters, communication matters, vulnerability really matters, because that's how you can grow as a team. I mean, I was always a captain on a team, primarily because people felt comfortable talking to me because I was vulnerable with them too. Like, hey, I don't really know what we're going to do here, but we're going to figure it out. And I was a safety, and safety is kind of the quarterback of the secondary, for lack of better words. So I just always had that ability to communicate, and was never scared that I was, but I always did believe in I had confidence in skill set, I guess. So I attribute, I've been able to draw parallels later, obviously through, but I will say this, it is still substantially different. Football and training, you can feel growth because it's visceral. I can feel it. To your point, something applies pressure to me. I can physically feel that pressure. When you're in the business sense, there is nothing to feel. And so the idea is a lot of times when it's not that always when you're facing, I think this statement gets just overstated dramatically in a business space, where if it's hard, it's the right way. Not necessarily. When it comes to me bench pressing and the next rep is hard, it's the right way. Usually, yes, that's how muscle is grown. Where people get very confused in business is it's a lot more nuanced. It is not as black and white. It just isn't. And so human instinct and training and understanding. So I think about all the time is, okay, what's brilliance at a high level? It's not necessarily your IQ. It's clear that economists are brilliant. None of them are ultimately wealthy because they're an economist, but they're brilliant, right? It's your understanding of other people and how they move and how they work and how they process and what their psychology is, and displacing yourself from that's the part of the business side where people, where outliers tend to stand out, is because they have that ability for whatever reason. Not that pressure's applied. Of course you show up on time, persevere. Okay. I don't know where, of course that's like to drive a car, you got to be able to pass the test, of course. All right. Now, to be a race car driver, it's a different conversation, ultimately. And I think that ultimately people think driving a car and a race car driver is the same. It's not. It's not, right? There's a marker in race car driving and whatever, and I'm not a race car person, so I could be totally screwing this up. But ultimately, where there's a balance when they're going 200 miles per hour around a curve, that if they go a fraction of a miles per hour higher, they're going to flip the car. Or a fraction under, they're going to lose the race. But they know the balance intuitively. And so I think about the people in business. Now, how do you get to that? You don't just wake up in the morning, start racing your car and get there. It's the thousands of hours of reps and the thousands of hours of conversations and meetings and appointments and failures and successes, and then gathering the data and then repurposing it and going forward consistently.
Yeah.
That's it. From me. And then you still are going to have people that are outliers and that are better and just have it figured out. And what's very hard to do when you see people at a very high level is you don't understand how they got there, because I can't imagine, right? And I still think I'm a baby compared to some of these people. I'm like, dude, but you have to do the daily activities and do it faster. It's the speed in which you learn and the speed at which the learning is applied that changes it. Not in theory, so anyway, so it's a long-winded way of answering. Similar, but much different. And so what I'm very cautious of is just because it's those things in football, or just because it related to CrossFit, does that mean no? Not yes and no. Yes and no. But when you can't feel the changes, that is hard for somebody who is more physical and sports driven. Mm-hmm. Yeah. That is hard.
I mean, that visceral part's missing.
It's totally missing. It doesn't exist.
Well, and as I'm listening to you explain this, I'm thinking to myself too, you can feel like you've got to this arrival point and then something changes. A condition in the market changes and you have to be on your toes and then adjust to it. And then it makes sense when you're like, oh yeah, I was the safety. I'm like, oh my gosh, that totally makes sense.
Does it?
You're looking, because you're looking at your whole team on your side of the ball.
Right.
And are my guys positioned properly?
It's changed.
Have we adequately read the play that we think is coming? And then can we execute our defense of what they're going to try to do against us? That totally makes sense.
Yeah, it was funny. So
I was a catcher, so like
You were?
yes.
Okay.
So for me,
So different
I'm like I
throws
see
and
the whole
different
field.
pitches.
I see who's on bat. I know the
everything.
game
That
situation.
makes
I know what the
sense.
count is. Who's coming up next? What pitch we got to
makes
call?
sense.
What he do at his last at bat? Is this guy fast or slow? Is he going to run on me or not? How many outs are there? What inning is it? Like how many pitches are we in? Like you think about all this stuff at the same time.
Right.
And there's a part of business where you might have it all buttoned up, and then something changes.
Of course.
And then what do you do then?
You know what it is too. It's like your ability to anticipate is in thinking through the next 3 steps. Most people, I don't know how many people can or can't do that, but I know people that can are very successful. Because if you're not thinking about the 3, 4, 5, 6 steps that could happen, then like you're not prepared, right? Ultimately, right? So there's preparation that's tremendously important going into a game or et cetera. And then it's your ability to be resilient after challenges, and how quickly you can come up after the challenge. Because to your point, you may have thought that pitch the guy was going to miss, and he hits a grand slam on you. Now you're down by 3 runs, and it's your adaptability and resilience that matters. So my kids are doing sports right now. My wife and I were both at one point professional athletes. Everyone's talking about how great their plays are. I don't care about that part. I care about how quickly they can react to when they're up against the wall and they're not relying on, they're internalizing it themselves and they're recovering. It's your ability to recover, not necessarily your ability to perform, right? And I think like that is so much more important than just, like I said, just the thing that, the arrival. There is no arrival. I think that's also the very painful part of business understanding. You never, like you said, you're successful. Okay, no one's found success. They're constantly being successful at what they're doing.
Yeah.
There's no like, I made it.
Yeah, I get it. No, I hear you. I understand. But even I find myself, I talk about it like this destination has been achieved, but it's almost like it's just another flag on the mountain and we're still going up the trail. Like there's going to be another flag of success, and then there's another flag of success. I've done really well and I've lost everything, and I've had to reinvent myself and then do another thing really well again after that. And I've learned so much through that because yes, there's resiliency and there's grit and there's starting in, dusting yourself off, pick your head up, all those kinds of things. But ultimately it does come down to reps, man. It comes down to like trying the things again. And you know what, something that Sam told me? So Sam told me on this show, success leaves clues.
Yeah.
And it's so simple, but it's also really profound.
Of course.
And earlier you were talking about how, I've learned a lot about what not to do. And because the things that you should continue are obvious. And unfortunately, I think in my experience, I've seen some people I've seen them miss the obvious. Like, hey, that thing worked well for you. Why'd you stop doing it?
Boring.
And then it's boring, right? It's not sexy. It's not cool, or I can't brag about it online or whatever.
Right.
But ultimately, it's like the people that do put in that work and they do, and I'm not saying you got to get up at 3 a.m.
No.
and run 26 miles an hour on the treadmill for 5 minutes straight and then jump in the pool. Who's that guy? I don't know. Anyway, it's the guy who's
Yeah.
But
there's a lot of those guys.
but ultimately, I guess what I'm trying to say and ask is, it can be all these facets and all these components, but ultimately, I think that there's a part of it that you've excelled at, which is absorbing all the input information and then putting it into application.
Yeah.
And I can also see just in the way you're describing all these things that's what's maybe helped you be an effective coach of people, is being able to communicate to them and see what they're doing right and wrong, and then give them input feedback so that they can go apply to get a more maximized result or a more efficient process or whatever it is.
Yeah.
Do you love that stuff?
I would say it this way. It's I really like I'm not a coach. I'm not any of those things, right? When I work with agents and brokerages, it's about helping them find and getting more deals put together that they can close. If we're a cash buyer coming in, we can buy it. The types of creative strategies we can acquire with. What I'd say is when it comes to, it's much easier to see other people's problems that you can help fix. I think it's obvious when you see someone, you're like, when Hurricane Katrina was happening, right? Everyone's like, just move. Right, and it's an obvious answer.
It's simple to say from the sidelines.
Here, but you can see usually the challenges people have, and I do like it. I do like helping people. The hardest thing is I'm not in the convincing business by any means. I don't want to convince anyone to do anything, which is why I've never envied mortgage brokers, or I've never envied buyer's agents and stuff. It's like, it's just wild to me to get to convince people to do stuff. It's to like do things that are better for their future or whatever. What I really like is seeing, of course I enjoy like helping others when they think they need help or they don't know. But like they said, the hard thing is there's very few people I can kind of relate to. And so at this point, like I used to be able to relate to people that were like trying to make $50 here or there. I have an issue of relatability because I don't have conversations about getting up and getting moving. I don't know what that's like.
Yeah.
And I can't relate to that.
Yeah.
So that part I don't like, I guess.
Yeah.
But it's not,
well, it's also, but you're also saying it's not a role you have to walk into every single day and do.
The difference is the conversation or question somebody should ask me is, I'm in a situation, what do I do? Not, how do I get going?
Right.
I can't relate to that.
Yeah.
I don't have an understanding
I'm already at step 7. Come find me here.
Well, it does. But the point is, if I'm in the process, and let's say I want to be a bodybuilder, and I hadn't started working out yet, like, what is Arnold Schwarzenegger going to tell me?
Right.
And I'm not Arnold in this example, but you understand it.
Yeah.
If I had been lifting for 15 years and I can't get the results I'm getting and I want to compete, now you're asking him, hey, I really want to change this part of my body. How do you do it? Those are the questions, because those people, they're doing it. I'd rather have people losing $50 million right now call me and ask me for advice on what they should do with their investment portfolio, as opposed to someone who's just trying to get their first Airbnb.
Wow.
I can't relate to the Airbnb. I don't understand.
Wow, and
how do you learn?
That's so crazy. By doing, right? Yeah, you have to get out there and do it and take some licks along the way.
Right.
Yeah. One of the I'm going to draw another correlation to catching. One of the things that took me so long to mature into as a catcher was not flinching when a foul ball gets hit and it hits you in the mask.
Oh, yeah.
Because, or when a ball's coming at you, I had some pitchers that they threw in the 90s, and when that ball's coming at you, your natural reaction is, oh, I should move. But the thing is, everything that's protecting you is on the front, and you actually don't become vulnerable until you turn. And so if you turn your body, your shoulder, your side, your hand, whatever, now all the protective stuff is on the front. It's gone. It's like a hockey goalie.
There you go.
But, hockey goalies now they have the head thing. Well, now real catchers have their head thing too.
Same difference though. To your point, all the padding's in front.
And I had to like train myself to like, oh, actually I'm safest this way. Right. And if I do this thing, that actually is the thing that puts me in danger.
Sure.
So working against the most natural reaction of the body.
Right.
I've also experienced the same thing in business. Oh, this seems like the most likely thing I should do. It hurt me.
Right.
And oh, wait, if I just stay steadfast on this thing, this is actually going to work out. But I really feel like I should turn right now and flinch, but I have to be focused and stay the course.
Right.
And then it worked out.
Right.
And it's such a hard lesson. I feel fortunate that there was a translatable experience in my life that I could like lean on for that.
Right.
It's also something I think I see people fail because of.
Right.
And it usually comes down to two. Well, I think for me, I see it as like one of two different things. Either they don't know something that could harm them, or they know and they're not admitting it. And those two things then become they can be undermining factors for whether something actually carries through to conclusion or not.
And I think part of it is a lot of people who experience things can draw through analogy, because you can only draw through, it's analogous to you. And people who maybe haven't experienced much can still draw through principle. The hard thing is knowing what principles to draw from and who to follow to draw those principles from. Because then you can find analogy in your situation, right? Or you can find a principle to your situation.
Yeah.
And I think that we all do both all the time. I tend to draw through principle first and analogy second, because no two situations are the same.
Yeah.
And if I relate something too much like something else, I'll expect the outcome to be like that same outcome.
And it may not be. Yeah.
Never is.
That's super smart, man.
Not one time. So I'd say the best advice to give people is draw through principle. So once your principles are figured out, in my space, the investing space, my principles are the property itself, the data, the debt, the equity, the return, the exit strategy. What's my principle? Investor return coming back. What's my principle? What's my trend? If I draw through this property is like that one, it's not. This is where...
Wow, that's really smart, dude.
this is where it's insight, right?
Yeah.
It's insight.
Yeah.
This is where, and when I see investors too, it's it's kind of like that time. I remember '08. I don't know. I didn't live in that time and space. Or I remember this time, or it was like then. Nothing's like anything, right? But the principles, when I look at the principles, I draw back to, okay, principles of the market, principles of mortgage rates, principles of sentiment, principles of those things. And now I can draw through history versus analogy through my experience, which is so small comparatively to the world itself. Wow. So I don't draw through my own analogies all the time. I can feel it and I can understand what you're saying, but it's not,
No, that's profound, man. I love that. By principle first.
Yes.
An analogy second. That's great. I love that.
Yeah.
What a great little framework for making big decisions too.
Yeah.
Because it can be easy to just revert to the thing you have like more of a direct line connection to emotionally, maybe.
Of course.
Or in your own physical like muscle memory.
Of course.
But yeah, principle first, I guess.
Because I'd imagine as a catcher too, when you had different pitchers pitching to you, it's different, right? It's the same pitch over and over, and you're the same catcher.
But they're a different pitcher.
Principles of how they move.
Yeah.
And you knowing their movements is your ability to anticipate.
Yeah, I love this.
Or the time and place you are in the actual game itself.
Yeah,
these are all so hyper nuanced.
Yeah,
that it gets lost in translation, either whether it be social media or all the communication happening everywhere all the time, where people are constantly trying to draw through things that they don't fully understand. But they tend to want to try and draw through it from something somebody said that they can kind of relate to, that they can then repurpose into putting out.
Yeah.
Which isn't the same.
And, oh man, I don't want to say you need to have your own show, but you probably need to have your own show, Daniel. You're just dropping bombs right now, man.
Thanks. I don't know. Yeah.
I mean, look, we have some amazing people around us in real estate and mortgage and just in business in San Diego in general. We have a lot of personal connections, one of which we end up tripping on, who we both would, I'd say, revere as like a stalwart in his craft. Like he's totally committed. Rusty is devout to what he does, right?
He is.
And, your track record says one thing, but the way you're communicating these things to me today is a whole different level, man. I really appreciate it.
Yeah.
Thank you for being so vulnerable in that and clear in communicating why you stand on these principles and stand on these things when you're making business decisions too.
Yeah.
I'm listening to you and I'm over here. I'm like, man, I'm getting taken to school right now. I love this. I love this.
Yeah. It's great. I'm happy to be able to
Well,
help,
so I do want to ask you a little bit about like what you see in the market right now. Can we go there for a little bit?
Sure.
Like, let's talk about what are you looking at in the market right now that you think are maybe opportunities that are worth considering? And what are some things that maybe you'd caution people to take a second look at? I mentioned earlier, there's the gold rush of ADUs right now. I know we have like a supply and demand thing in San Diego. We got prices, we got affordability, we've got rates, we've got cost of money, and we have funds all over the place now being started because people aren't looking at real estate the same as they used to even 5 years ago, let alone 10, 15, or 20.
Yeah.
So I know it's a lot I'm tossing out on the table in a cornucopia of topics.
Yeah.
But like, let's talk about
the biggest one. Where
Where do you think we're at now? What do you think are good opportunities? And what are you taking a second look at going, I'm not so sure.
It's hyper nuanced. I go back to that. I guess I'll start with where I'm looking at now, to not give up too much information.
Well, yeah, no, don't. I'm not saying trade secrets and stuff like that. But what is it you got your focus on?
I would, I avoid, and I said this. I posted this on social media a year and a half ago. I posted it on social media a year ago. I'd avoid the beat prices, meaning. The move-up buyer is a very, very finicky market. If people are flipping houses right now and you're trying to move into and sell houses in a 1.1 in Claremont, that drops to 950 very quickly, as it should, by the way, because these properties drastically went up in value because rates were down and I also posted this too, Fed was buying all these mortgages, okay? They guaranteed the market. So a lot of these investors never had to get skilled. Okay, so that's a different topic, but
that's a profound point that I think most people either don't know or they're not willing to admit that they know because it did get kind of underpinned and backstopped during that time.
Right, 100%. I mean, the market was propped up on artificial. It was artificial. and it was temporary.
Yeah.
It had to happen.
It's like artificial but real at the same time. It was like a
Right,
real
it's very
backstop, but for
bizarre.
artificial pricing. Like,
I wonder in 50 years when you look back at this time, what we'll look at as far as what it truly did to the economics of the United States. I don't know.
no one else has told that to me, but I think about that all the time.
Yeah.
I think about that all the time,
Yeah,
dude.
you're long-term thinker.
Well, because I wonder, like, because right now, I still want to hear you, but I want to tell you something. Maybe you're sitting across from is like we sit and I think about our generation, like our kids and our grandkids. Like if we can't help open up an opportunity for them in real estate and they're left to their own devices, it's going to be more difficult.
Right.
So, but then that behavior and that thought pattern for us leads us to be buyers of things right now at this price, or maybe at a little bit of a reduced price, but for a hold strategy long term so that they can have something.
So I'll say it this way too. And so from my perspective, investing and buying are two different things, and they get very, very they get enmeshed way too much.
Easily too. Yeah.
And very easily, because a lot of agents or a lot of mortgage people say, hey, it's a good investment to buy real estate. What do you mean? In relation to what? To what price, what area, what location, what data are you working off? Great places to buy are typically not the best places to invest. Okay, so great place to buy property in Arizona right now is $550,000. You get probably a decent house. I'm using Arizona as an example. Could be Kentucky. Is that a great place to invest? Well, the appreciation's low. I saw you guys had a podcast. So 20% of California was owned by from investors, which is I did not know that. Holy crap!
I found that out in doing research for the show. I was like,
That's
"What?
insane, dude.
That's nuts."
So I'm like, I'm not special. We're not special, right?
Well, that wasn't the angle, Daniel.
I'm messing around, but the point is, what a data point.
That's
That
crazy,
is
right?
Wild. I mean, but it makes sense. 40 million people. 3 million. There's 3 million people in San Diego. 3 million, 2.8 units, whatever, 2.8 million. Anyway, so it's like supply and demand. But anyway, so. That's the big thing. So where to buy and where to invest, you have to have a line of demarcation of what those things actually are. Because as an investor, I'm looking for appreciation. I'm looking for buying something below value that will appreciate, that I can sell off, whether it be as the way it is, or refine it with remodeling and then sell it off, or refine and remodel and keep it. So that tends to be coastal. It tends to be prices between $600 and $950 remodel value, because that's your first-time home buyer still in San Diego, unfortunately. $6 is kind of entry, which those people have to purchase. Now, incentives, anyway, doesn't matter. And then 1.2 to under 2 million, which is more coastal, great prices to invest in right now, because your move-up buyer has equity from previous years that they can buy those other properties, and those properties tend to be more in better neighborhoods, good school districts, things like that. But the middle is so the 1.1 can go to 950 tomorrow, as it is. The last just 2 months, the data has already been there. And the over 2 million to 4 million is now having 150 days on market on average. That's a big difference, 2 to 4, but it tells you that it better be incredible and the location better be remarkable for people to want to buy it.
And they typically have more choices on their side of the ball. Like, oh, it's 2.5 and I don't like it, and that one's 2.7 and I do. Well, I can stretch into that. And there's a lot more. I don't say it's variable flexibility, but it's like if you're in that 2 to 4 range, you have more choices than someone who's at that maybe 950 to 1.25. Just from a buying power perspective, typically this is what I've seen. Yeah. So it sounds like there's like this leap. It's the first time the entry buyer at 600 to 950, and then the 1.25 to 2 maybe is kind of where you're looking at right now.
That's where we're playing.
Yeah,
and I'm playing in markets that are appreciating. Like North Park, San Diego, for example, previous to COVID was already appreciating 12% a year.
Yeah,
because everyone's like, wait, these all need work, and I can put some money into it and everyone wants to live here, right? Because it's so close to downtown, location's great.
It's central to so many things that people love doing in San Diego.
I used to be so annoyed by the location, but like I'll just say location.
As you get older, man, how many of those idioms become true?
It's so annoying.
There's you can't shortcut, you can't cut corners to on your way to success, all this kind of stuff we learn. You're like, oh man, it turns out to be true when we're older.
Right, you hear it in quotes, but you don't actually internalize it.
Right, but then it becomes real.
Yeah. but location is incredibly important. If you're buying for investing, if I'm buying to buy something, I used to, when I was in wealth management and looked at stocks and looked at mutual funds and all these things, I'm like, okay, I can put my money in the index going to gain S&P 10.5% a year. Not necessarily compounded, but let's just say it's 10.5% a year, whatever, historically, blah, blah, blah. Okay, I looked at real estate. Now, if I take inflation off the top, okay, my stock market maybe does 6.5 to 8%. Let's just use that example. Real estate, on average, was 1% a year if you calculated inflation. So I was like, why would you invest in that? It didn't make sense to me. Now, if you buy that at 70% on the current dollar, okay, you just gained 30%.
Right, yeah.
Right, I get that
right
part.
Away, yeah.
But as far as buying it into market prices, it never made sense. It's an investment.
Yeah.
Now, the other side of the coin is as your average consumer, especially from the financial planning perspective. And I've seen the data of like the average homeowner has 40% more of net worth than someone, or 400% more than someone who doesn't own a property and all those things. And I think the vast majority of the reason why that is, it becomes a forced savings. It's
people's financial plan to have equity and then sell it or gift it to their next generation. Yeah.
And what ends up happening too is everyone passes away in their family, for example, and they have no other means. I mean, I deal with people on a consistent basis where there's life transition. Okay, probate, trust sales, inherited properties, elderly needing to downsize, in a reverse mortgage, all the time, and that's a daily basis. And you know what? Thank God they own that house. Because if they didn't have that, they would literally have nothing because people spend their money. They do. So I think from that perspective, it can become, I could say, a good forced savings for a lot of people.
Yeah.
And so that's.
Even when we were chatting before we started the show today, I was talking to you about how one of our methods for staying in communication with our past clients is doing things like this. Mm-hmm. And it's because sometimes people are in that silent suffering stage of their life and the house is really their only bailout.
Dude,
is they have equity and they have to do something with it, either a HELOC or refinance or even just sell it, because that is their get out of jail free card, if you will.
And I think too, it's very easy to sell a mutual fund. You just click on your ACH, it transfers to your bank. It's very easy to sell off.
They have made that very easy nowadays, haven't they?
It's very easy to sell, to unload your 401k. You're going to pay your penalties and all that stuff if you're underage, but it's very easy to take money from liquid accounts. Yeah. It's not easy to sell your house. Yeah. And so because of that, it does become a nice forced savings.
Wow.
It does become a nice way, because moving sucks. Right?
I think you're moving
right now. Moving sucks. What a terrible experience.
All these like complex things you're talking about today, and then you're like, yeah, I hate moving. Like, dude, all the stuff you're talking about is way more complex than moving. But hey, that's just, I don't know. Maybe it's not.
It's not. When I say, I mean, to me, I don't know. It's I look at a piano. Some people can. I look at it and I'm like, other people can play. I don't know.
Flying left and right. So what is something that maybe you're looking at and going, I don't trust this happening in the market right now? What is it? I don't want to say risk averse, because that may be too strong of a term, but like, what are you definitely exercising some caution about?
Everything.
Wow, that's okay. Unpack that a little bit. What do you mean?
And I think but here's to be totally frank, I've always looked at the market that way.
Oh, okay.
So I've never. Here's the other side of the coin. Is the more I'm always looking for problems. That's what I do all day. That's how I'm able to do what I'm able to do, produce what we're able to produce as a business. We're always looking for problems. So because of that, I naturally know that when I'm only looking for problems, there's a book called The Happiness Advantage. Have you ever heard of it? Happiness Advantage?
Yeah, I have not. I haven't read it. I've heard the title though.
You need to read it.
Okay.
Or listen to
All
it.
right. I'll buy it on my book list today.
But one of the things he talks about is like someone who works as this. He's got like someone who's a trial lawyer, comes home and finds all these issues wrong with his wife or with his spouse.
Oh no.
Because he's always working with issues.
He's always looking for oh man.
Okay, so it's one of those books you're like, son of a bitch, right? So I'm always looking for problems and challenges. So I'm never optimistic about the market. Wow. I can't be. Because if I was, now I'm speculating.
Do you feel that insulates you a little bit too? I mean, I can see where maybe that is an advantage in
it's
in a lot of what you described today.
It's a supreme advantage.
Wow. Because
I'm never looking at one thing that's going to be the one. When I look at investing in general, I'm looking for every reason why it won't work. Not the reason why I can't.
Because they're all potential threats.
That's correct. When the market's appreciating, I was scared. When the market was flat, I'm scared. When the market's down, I'm scared. Just so you know, that has kept me remarkably profitable.
Wow, that's so crazy.
Because I never think one thing is going to lead to the next thing, the next thing. Because when the market turned, June of 22, rates went up, April, whatever, it did nothing. They go up, what is it, 75 bips? What is it, 50 bips in June of 22?
Yeah, and they just kept going.
You saw what? You saw a shut off, right?
Yep.
I only had 2 deals out there. You know how many people had 20 houses on the market trying to sell them. People had all kinds of properties sitting out there because I'm always looking at the problems.
Yeah.
I'm like, what's going to happen? So now, when I say scared, it's not that I'm not optimistic on pricing. Now, that's relative to price to value ratio. If you told me, hey, you can have this property for $1, am I scared anymore? No.
Yeah.
I'm insulated to risk. I know that, so I'm buying in margins of safety. So no matter what I'm doing, I'm looking for margins of safety. So if I'm currently factoring and something was going to sell for $1 million, I'm now I'm going to look at what's the worst case. Well, let's say it sells for $925. Okay, so I need to drop my pricing ratio down to a number that's relative to what the market could do. So when the market's doing this, I'm underneath it just like this.
Wow.
And so that's like the level of specificity it takes, like anything else.
Wow.
If someone's originating a mortgage right now and they're the correspondence lender on a mortgage, they're more pessimistic with underwriting, as they should be, because they're deploying institutional capital.
Yeah. And
institutional capital is exactly how our economy tends to operate. So we kind of need to make sure that
it's scrutinized that way. Yeah. Wow.
One of the things I'm seeing a lot of is in the private money space and the hard money space. I think there's actually going to be a bigger catastrophe there because that was never RESPA regulated. And so all these institutional capital, so we do broker hard money. All these hard money companies have now come out with products that are very interesting to the investor world. And so you know what a DSCR is, right?
Yes.
Debt service coverage ratio.
Yeah.
Well, you can get non-ratio DSCR now.
Right.
That means it's not a DSCR.
That's right, and that's wild.
It's wild. It's a backstop. But I didn't live through 08. You did. There was probably a lot of wild stuff.
There was a lot of wild stuff in 08 because again, everyone was like hyped up on this. Up and to the right forever in perpetuity,
Right.
which was not the case,
Right.
and they were broadly, I'm going to say, looking the other way because. Now we all know they knew exactly what was going on. They knew exactly what they were doing.
Sure.
It was just a money grab. It was literally like
crazy.
at the time the world's biggest game of hungry hippos, and it was dollars on the board.
Right.
It's just hungry hippos. Get as many as you can. And you look back now and you watch the replay of the stories and how things were. Let's say how the infrastructure of how the market was set up.
Yep.
It was destined to fail.
Right.
And for those of us who were brand new in it, I did not know what my threats were.
Why would you?
I did not know what my risks were because I was helping people get the thing they wanted. Right. And for 10 years I originated and I did loans. But you just said something right now that I've never heard somebody say. You're saying you said risk margins?
Margins of safety.
Margins of safety. And I get that because that's relative to the risk at hand and potential risk downfield.
The biggest mortgage-backed security buyers, right? Fed pension funds.
Yep.
They typically buy
Fannie, Freddie.
They typically buy at 125 bips. They was what they buy at. They're sitting at 160 and they're not buying. That's why rates haven't dropped.
Yeah.
That's margins of safety.
Yeah.
Because they know a refi boom can change that. They're going to lose cash flow on those securities.
Yeah.
So they're waiting.
Yeah.
As a fix and flipper, a wholesaler, we are doing the smart ones are doing the exact same thing. We're doing the same thing. We're buying in margins of safety, preparing for something. Now, optimism is if nothing happens, extra win. But I can't bank on that. That's speculative. Even the way we're buying is speculative. But investors have to buy.
Yeah.
That's how we earn money.
But buying with that margin of safety I've just never heard that term. And maybe that's just, I also don't think I'm trying to recall really quick. I don't think I've actually sat someone here who does real estate investing, manages funds, lends money, who also has had experience in financial planning.
I guess we're all a little, Well, but I'm a little different.
I'm saying that because I totally get the interplay of those things because of what I do know about financial planning from the people I know in it and what they've taught me
Right.
as not a direct participant, but like a front row seat to it. And then hearing you talk about this, it makes sense why you do things this way, and why you have different things that have different market exposures at different times for different reasons.
That's right.
And different safety measures in place for all of those reasons.
Correct.
That makes a lot of sense.
Correct.
Damn, dude, oh man, you're doing it at a whole different level than I've been able to sit and talk to someone about. This has been tremendous. Yeah, no, this is great, and I get it. I understand exactly what you're saying, and even then, I think that despite California having a 20% investor ownership rate, and San Diego being like a hotbed,
it's going to drop.
It has to drop because, and not just because the chips will fall as they may, but I think people are going to get sick and tired of it, and there are people taking L's and they're not admitting it. I think there's a lot of people taking losses.
Investors, you're saying?
Yes.
Because they
look at Vegas right now. How many people speculated out in Vegas and did Airbnb, VRBO, short term, and look at all that inventory happening there right now.
You know what's wild to me is, as I got into the world and I really got in, because if you haven't noticed, I don't really half-ass anything.
No, we have a term at our house.
Over-obsess.
We have a term at our house. Don't half-ass it, whole-ass it.
Yeah. I mean, I just don't know another way. And, I'm sure you're the same, just listening to you as a catcher and all that. I'm like, dude, this guy was obsessed. But I get it. You're psycho, right? That's kind of
that's what my closest friends say. Like, you're nuts.
Right? Yeah. Well, guess what? You were successful, right? Sorry, I lost my train of thought. Oh, people losing? Is that what we're talking about?
Yeah, I was saying people are taking L's. I think they're not admitting it, and they're going to have to be. Their hand's going to be forced to sell or give up or whatever.
The reason why, and I'm going to go back to this, institutional capital the underwriting is very laxed. It's not like traditional capital. Yeah. So you have is a lot of dumb money. A lot of dumb money. I want to say the Fed printed $2 trillion, right, in 2 years. Only 15% is deployed. Only 15% is in the hands of the United States, like actual people using whatever. The other 85% is with institutional capital that has a lot of capital that's deploying in different directions, right? And so, yes, dumb money will move out, and people may not talk about their L's and stuff. But ultimately, it's hard to explain what will happen, I guess, in the current state of the economy. And there are ways out of those things. Like I was talking to an investor yesterday, and she invested in this deal, put in $100,000, second position deal. And I was just like, I looked at the deal, and I'm like, hey, so you have two options here. You can sell your second at a discount. She's like, I didn't even know what that was. I'm like, well, yeah, you can sell a second at a discount. It's just you're selling your second position mortgage you're paying. Or you can convert it to equity and convert the note. I was like, but you're going to have to wait 5 years if you do that. So you either cut your losses now, or you try and convert it to an equity position and get out of the situation, refinance your deal, come up with some more cash and hang out. And so I think a lot of it is, people may, or you end up in a short sale, but you're not really in a short sale.
Yeah. Well, I don't know with the appreciation, the way it went, I don't know that we're in that kind of same short sale environment that we would have been prior. And even people who are facing the potential of being unable to pay their mortgage and let's say eventually go down the path of foreclosure, if they have rampant equity, it really becomes a stubbornness test. Am I willing to try to carry out and get myself out of foreclosure, or can I just sell the place because it still has margin in it?
Right.
And I think that, and I keep seeing people online, and San Diego's becoming a little bit this way. I see some other people that are saying, oh, there's a lot more foreclosures now than before. And I'm like, but they have all this equity. Unless they bought in 22, 23, 24 and cannot make the payment and have not more appreciation, then people are playing with house money, as they say. So I'm not necessarily as concerned about that as I think that people are out here talking about.
Like I said, people draw through analogy. They don't draw through principle. So that's what you're hearing is people like, it's just like, it's like, no one's, yeah. And the average consumer does the same. The news does the same. No one talks about the word recession. They started using the R word in the news. It's like, all this is 2 consecutive quarters of a downward market. What are we talking? Like a recession to me is like, I don't know what that even.
And what irritates me the most
to anything.
What totally irritates me the most, and you're going to learn this about me right now, Daniel. What irritates me the most is when they were starting to say that we're not in a recession. We did have 2 negative quarters consecutively of negative GDP, and then now that we don't have it, they're saying the word. So I freaking hate it. I hate the gamesmanship in that whole thing, man.
but it affects consumers and this is where unfortunately it affects consumers. And like the other thing is when I talk about like the market in general, I've always tend to spend more time on than anything else. Everyone talks about inventory and interest rates because they tend to wag the dog. The only sentiment I tend to pay the most attention to is the only one is consumer sentiment. That's ultimately what matters the most, and it's the most nuanced. It's just how do people feel?
Yeah.
And a prime example of this is when rates went down in March of 20 because they had to zero. How long did it take for the market to do anything? They were at zero.
It was. People had this like weird thawing out period, almost like, I can't believe it's like this. Wow, is this still like this? Is it going to stay like that? And then they all flooded at once.
Sentiment.
Yeah, it was all sentiment.
So it's
You're
not
100%.
So saying, so it's like it's not like that's why I'm saying the economists tend to be very brilliant, but they never make anything. They never execute on it because they're so. But like people who are more emotionally driven, which is everybody, right? Yeah. Ultimately, you can become wealthy. You can become wealthy.
Wow.
But you have to pay attention to how other people feel.
Would it be an overstatement to rename you the action-oriented economist? Because you know a ton about the economy and the markets and have experience over here. And you're talking to me about things that normally people don't sit here and talk to me about that I sit and read about and study. I'm like, no, but this dude's like an action-oriented economist. There's a difference. I'm going to add that to your bio for the next guy you do.
Yeah, that's a good one. I like that. I don't know. I'm an economist, and I think I obsess over the things that affect my business.
Well, yeah, I was going to say you're interested enough to know about these things and be intimately familiar with them, either because of your previous experience or because of that and what you do now, where I'm like, oh, this dude's seeing it at a whole different level.
Yeah.
Yeah. I mean, these are the kinds of things I sit around and when we're off camera, I sit and talk about these things with Brian and Memo here at the office. And okay, guys, here's what's happening.
Yeah.
Here's the kind of the macro stuff. Right. But then what's the San Diego stuff in that mix?
Right.
And then how do we help people know what to do and navigate among that's actually more of my job here.
Right.
Is that I don't originate. I'm helping figure how do we help the people that are needing our help here, and how do I continue educating our audience and our past clients on how they can make the best choices for themselves.
Right.
And it's not really financial planning. It's more like strategy management, I guess. But it is just deploying mortgage solutions towards household problems.
Right.
But I love this. And that's kind of what I'm joking saying about the action-oriented economist. I'm like, dude, no, you're seeing all this macro stuff too.
I am remarkably action-oriented. And I'm able to do that because I'm confident in my ability to earn. And so like when I was remarkably broke, and it's not, when you talk about being broke, like broke emotionally, broke financially, struggling, right? Let's talk about the blanket being pulled off after sports.
Yeah.
Broke's broke. And it's not, but now because I'm obsessed, it's wild, right? I probably have the biggest financial anxiety of anyone you've ever met, which is why I'm good at it. Does that make sense?
Yeah, no, totally.
So the only way to overcome anxiety is to take the action. So like if people are scared of a coffee cup, the only way to get them over the anxiety, like this is through like proven psychological methods and therapy and all those things, is to just pick up the coffee cup.
Yeah.
I know that intuitively, and I'm willing to put myself out there to experience it. And I'm willing to put myself out there and take big positions in big ways consistently. Because one of the things I know along the way, as we're talking about, is like, because I've been here, it doesn't scare me. Because now I have this. This takes the most experience, though. Like flexing that muscle of like remarkable, like, I say like the anxiety could be crippling for people. Of course it can. For me, I use that energy outward, and then I execute on the challenges I put in front of myself. And that's how I've been able to grow. So like very similar to the visceral reaction of like, well, if I keep lifting heavier weights, I'm going to get stronger. That's exactly how I've been able to build a very quick trajectory upward. It's because I will constantly lift a heavier weight and I'll shoulder the heavier load. And then people who I'm working with, I bring with me because we're only as strong as we are together. Right. So taking action to me terrifies me, which is exactly but because of all the calculations I built into this, like methodology of the math, the algorithms in my systems, all that stuff, whatever, it's still I still have to remind myself that that's how I have to grow when I'm facing something that I'm going to do a little bit bigger. And so at different points, I'm doing different things that are pushing myself. But I don't, unfortunately to me, I do, unfortunately, this is fortunately and unfortunately, it's not comfortable ever.
Yeah.
I never sit and I'm like, and if I do, it's very short.
Sure. I get that. I can see that from all the things you've mentioned here and your experience and what you've done and why you've done it. Like, and so you're sitting across from a guy who went to school with Rusty.
Right.
And I studied psychology. It's like human behavior and patterning and voice and communication. It's all, I'm taking all that in, and I see that. And it's not because you're a dissatisfied person. It's because you're in this like constant pursuit of next, I think, as well as pursuit of more, but better and more. Not just more for the sake of more, not just better for the sake of better, but then bringing people along with you, like you said. Like, how can I take them? Case in point, we were on the show earlier this week, and we were doing this rapid fire question with these guests. And one of the questions was like, if money were no object, what car would you have right now? And my answer was a school bus. I was like, I'd have a school bus, like yellow, the school bus. I'd call it the cool bus, and I'd put as many people as I can in it, because I just want to go in this direction with people and like enjoy the rest of my life and make it meaningful and purposeful. And I'm so glad that you said that. Yeah. That's personal to me, and I get that about you.
Yeah, 100%. And but that's how the best teams operate, right? Like, it's always a group of people cohesively in the same direction. That is a team, period. And that's what my company is, a team of people. We are like all lockstep, and everyone wants the same things. And we're all going to go through challenges. We're all going to go through. We know there's pain, but that's part of it, But there's tremendous growth, and that's where, like, what's weird is, I used to think like $1 million was a lot of money. Oh my God, $1 million is a lot of money, man. If I couldn't imagine it, right? And to be clear, I remember the brain, and there's probably people listening or they're part of it. They're like, man, and you don't know what's a lot or what's a little till you experience it. You just don't. You can't relate, right? You just don't. And so it's like every level. And then but it starts with that moving $5,000. Then it starts moving 10,000, then 15, then 20, then 30. And your point, taking the loss that you had, you took at one point. But that's made you who you are now. I'm sure the resilience is like, been through that. That's the part, that's the growth part.
It's like having a stack of like Jenga blocks that all fell down, and then you got to restack them again, and there was a part in the financial restacking where it's like, I was literally just walking home with $500 every other week. It wasn't $500 every week, let alone every day or every hour. It was every other week. And like, that's the level to which I had to be like re-humbled and then reminded, no, build it right this time.
Yeah.
Because it was on shaky foundation before.
Right.
And I felt like the stack was good, but then it crumbled. Like, I got to build this stack differently next time. Yeah. And it was just, I'll say meager, because $500 every other week for a family of 5 is not a lot of money. But that's where it was, and was living back at my parents' house, restarting everything, dude. And I think about that a lot. I don't talk about it as much, but I think about it a lot because it is another marker on the path of the mountain that we're climbing. And to me, I look back at it fondly now, but man, it was so uncomfortable, but I'm also so grateful for it.
Question for you. Where do you, listening to that too is, it's powerful. Thanks for sharing. But how do you see, like, let's say rewind to you then, right? How do you see somebody getting started and just trying to buy their own house? And how do you fix the housing economy?
Well, so
you guys face borrowers.
Yeah, there's kind of multiple things at hand. The first thing is, on my own part, is I had success too soon and too young, and it exposed my immaturity and my impulsiveness. Right? So it was exposed. That was my blanket off moment. Sure. It's like, oh shoot, I'm stripped naked of all the things because I had built what I thought were success and what it looked like and all that, and they're nothing actually. Yeah. Okay. So that was kind of part of it. as to answering like how do we help people get in and all that is number one over everything else is being blatantly honest about what you're trying to do. Like, what is it that we're trying to help Daniel do? Because if I'm not a good aid for you in getting there, then I need to help you find that person that can help you get there.
Sure.
Right. So admitting where we can and cannot help.
Sure.
That's the first thing.
100%.
Long term, fixing housing in San Diego, I think, has a couple of facets to it. Number one, I think, is policy. Number two, I think, is persons. So they're both P's, right? The people and the policies. The policies will allow people to do or not do certain things. You recently saw that there's like going to be a change to the ADU rules in San Diego where you can't just take one SFR in the cul-de-sac in North Park and build 40 units anymore, right? Right. So there's policy, I think, that we have to play within the sandbox of what we're allowed to do.
Right.
And then people doing the things that they can afford to do or that they choose to do or want to do within that. And now to coin your term I learned today, within margins of safety.
Right.
And we're unique in this sense that because San Diego has such a large military presence, we have our own little backstop too.
Right.
Because we focus mostly with VA, active duty military, and veterans.
Yeah.
They have their BAH if they're active duty, and they have their housing allowance every month.
Right.
That's not shutting off.
No.
Unless you go all the way up to Congress, and Congress is like, yeah, we're not going to pay our soldiers anymore.
Yeah. Not going to happen.
Not going to happen, right? And oftentimes in the case for veterans, they have some sort of income because of their military experience, number of years, rank, all that stuff. And then they have their civilian job.
Right.
So their ability to afford almost forces us in this unaffordability position for people who don't have those things. And I'm not saying that it's the biggest piece of the graph and the pie of San Diego owners.
What properties in San Diego are VA?
I actually don't know that, but I can tell you another number that might, to scale, get us partway there.
Yeah.
Is 25% of our Navy is in San Diego.
Is that right?
So that's a lot of people.
I didn't know that.
That's a ton of people.
It is.
So, also that's because the Marines get tucked under the Department of the Navy, and you have Camp Pendleton, plus you have 32nd Street, Coronado, all this stuff. So, if that is to be at scale, I'm not saying that 25% of our homes are VA, but what has happened over the last 5, 10, 15 years is people that were PCS to San Diego for 2 years, 3 years, 4 years, or whatever,
What's PCS?
bought a permanent change of station.
Okay.
They get orders here.
Okay.
Yeah, they get transferred here.
Okay.
So they buy a house here in 2015.
Right.
Okay. Use the VA. Now they get transferred to, let's say, Virginia. They move to Virginia. They still own their house in San Diego. Who comes in behind them? An active duty military member who can use their BAH payment that they get every month to pay for that house. And now this active duty person owns an investment in San Diego.
Right.
Now, because people have become hip to that in the last 5, 10 years, there's a vastly quickly growing number of homes held here in San Diego by active duty military veterans, whether they've stayed here or left.
Yeah, because they're smart enough to be able to keep it.
Well, look, they
had the resources and able to.
They had resources, they had the right information, and they made choices. So the policy allows them to do this, and the person decided to do that. And so.
But it doesn't fix entry level.
It doesn't fix entry level, and I actually will contend I think it's made it more difficult. And here's why. Yeah. On the VA scale, every year they do a cost of living adjustment.
Right.
So in San Diego, if you're married, how many kids do you have?
2. You
have 2 kids. So you, your wife, and kids. So a family of 4. You're going to make more base allowance for housing than the single guy. So if you need to buy a $1.25 million house in Claremont,
I qualify for more.
Your BAA, your housing allowance might be $5,000.
Wow.
Which means, that mortgage payment of $5,000, you can pay it.
Can buy more.
Now, what people say though is, you don't make any money in the Navy. Well, the BAH isn't taxable. So your actual income might be only $3,000 a month.
I didn't know that.
But your total gross you're taking in could be 8, 10, 12.
Sure.
We've had people that are married with both of them having 20-year-long military careers, and their gross accumulated monthly is $18,000, $19,000, and they both get housing.
It's great. Wow.
It's insane. So this is why I'm saying, how do you fix it?
But how? Yeah.
Long story longer, I don't know how you fix it when we have some built-in features that are propping it up and holding it there.
Interesting.
Isn't that interesting? Isn't that nuts?
And the cost of living does not go down, as we know. So every year the incentives are high. The amount you can borrow is higher,
I might be wrong in this. I think the only other place in the country that has a higher cost of living adjustment than San Diego, I think, is Hawaii. It might. I think Hawaii's the only one.
Sure.
Because Hawaii is
like
way
10
more
houses
expensive.
there.
Right. There are 10 houses, and they're all $4 million.
Right. I mean, right? I mean, it's just it's an island.
So, how do you fix housing? You got to have people who are long-term invested in San Diego, whether on their own, buying a house, holding it, keeping it, transferring to the next generation. Part A. Part B, creating housing for those who need to buy at the entry level. And part C, investors who are going to, let's say, portfolio properties like you kind of alluded to earlier.
To sell them.
That might just hold
But
them.
If
and
investors keep them, it doesn't help entry-level properties.
Well, but what about cash flow though? Like if you have a portfolio of properties and you're
I'm talking
cash flowing, like
I'm talking about how does it help the entry-level buyer?
Oh no, that doesn't.
Entry-level buyer
Yeah.
is what's really broken, I think, in the United States in general.
Agree.
And that's like the part everyone's the most worried about. That's where
Agree.
Powell's most worried about. That is the biggest fear, is like there's not a lot of entry-level housing. And obviously we're insulated. We have our own little thing in San Diego. I mean, just talking if the country as a whole is hard.
Yeah.
Which I never understood, which makes sense to me. Two things. One thing makes sense to me. Another thing I never understood. One thing that's always made sense to me is VA. You can assume a VA loan, a VA to a VA. Like, man, it's all about payments.
Yes.
What a win for VA people.
Absolutely.
Yeah, it takes a couple months for approval, but like, do it. That's an incredible opportunity for VA buyers. One of the things that's always been very strange to me about the economy as a whole, and when I was in financial planning, I didn't understand this, is why you couldn't take your mortgage with you. Like policy wise, why not? Like if I got a 4% mortgage, why can't I use the same 4% mortgage if I am moving to Hawaii? Well, I have to originate a whole new loan at 6.8%.
I have two answers for you.
It locks up the economy.
Well, so first of all, I don't know if you've heard this conversation has been coming up. It's kind of like the whole school choice thing. Like, why can't the money just go with the student to whatever school they want to?
Yeah.
It's similar in that nature where it's like, oh, why can't the mortgage just go with the person who's changing?
Right.
And the reason is churn rate. Because you can't churn that money. You need to capture fee. You need to feed the machine. So the investment houses.
Yeah, but because values,
because if rates go up, just follow me here from a financial planning perspective. If rates go up to 7, and you're going to allow someone to take their 2.25 over to here, there's a lot of margin you're missing out on, because if they sell that house and get a new rate at 7,
it goes back to the MBS side.
Yeah,
I understand it, but
it also sucks and it doesn't solve the problem.
I understand it from that perspective. But I also I don't necessarily understand it from the like how do you it's like it doesn't solve anything.
No, it doesn't. No, it could help the move up buyer you're talking about. That gap you're not looking at or not playing.
If you really took at it and you took like the aggregate and you really like dialed into the data and you said, okay, if this person did this and this person did that or whatever, this type of properties, I guarantee you there's a balance there.
There probably is. And I think the issue is, how do you strike the balance and also maintain all of the expectations financially that need to be met, if you will?
I understand.
Yeah. I think that's
the thing.
I think that's that.
That is exactly it.
Yeah.
You know, it's funny because you talk about politics and policy and all this stuff. It's like, I think that Powell, I don't know if Powell and anyone in their situation could do as good a job as he's actually done in his current spot. I mean, what I'm like Jerome Powell I'm talking about.
Yeah.
By not crashing the economy, I think everyone agrees they held rates too low for too long.
Yeah. I think everyone should know that.
We agree.
Yeah.
Everyone's like, what the hell are you doing? It was getting out of hand, right? But I think not crashing the economy the last 2 years, holy cow, what a balance.
Yes. I agree with you 100% on that. I think the problem that I've had with him specifically, or maybe the Fed in general, isn't that the outcome isn't right. It's that, yes, they're slow to act. They're usually reactive as opposed to they're reacting to something. They're slow.
They were too slow to increase it.
But now they've changed their answer 3 times in the last couple of years too. We need to get inflation into check. Okay, that was this. Now, okay, we're gonna have a soft landing. Once we can corral inflation, then we'll look at rate cuts. Right? That was the first thing we were sold. Then they said, we're gonna cut rates and we're gonna be data dependent. But now the data has supported what they previously said they would make rate cuts for, and they haven't. And now they're saying we're not sure about tariffs, so we're not gonna cut rates because we're not sure what tariffs are gonna do. So they've moved the carrot in 3 different big chunks over this last 36 months.
You played tennis with our buddy,
come
right?
on! I got dragged into tennis by Rusty.
What did you learn? What did you learn in tennis?
First of all,
how to return a ball. What did you learn? What's the first?
Anticipate where they're going to hit it and get your feet in place first.
So watch the ball, not the player.
Yeah.
Okay.
Yeah.
Let's just say
I see you.
Let's say when you're pitching, watch the release.
Yeah.
and you're as a catcher.
Yep.
And react to where the ball's going.
Yeah.
I pay very little attention, if not any, on what's being said in the news.
Oh, it's super smart.
Because, and this has like been my speculation on this, and it seems to be right. You cannot trigger a refinance boom if you're holding these MBS, if you're holding all these mortgage-backed securities. Okay, you also can't crash the economy. No one's going to say that out loud. Jerome Powell's not going to say that out loud. And it's easy to point to reasons. Well, oh, look at these tariffs. Look at that. All that stuff had to keep sentiment moderate, because if sentiment drops, the economy crashes. This is why I think it's most brilliant. You're going to look back on this time in 20, 30 years and say, holy cow, what a way to not crash the economy. That's how I look at it. Because a little quarter point here, a little 75 bips here, that was just to satiate people, to think that it was going to improve, because hope is a much bigger marker to keep people safe and insulated, as opposed to just giving them fear or giving them too much optimism.
Yeah.
You can't give up too much optimism. You can't make housing unaffordable, but you have to keep it. You have to satiate people a little bit, which is exactly what happened.
Exactly what they're doing. Yeah. What happened and what they're doing. Yeah.
And what he had to do.
Yeah, man.
So if you looked at the 6 to 9 months, you're going to see, here's what I literally believe what's going to happen. If I look at their holdings and I look at the actual situation, and the biggest holdings of these are pension funds. Okay, they are obviously, that fucking matters. Okay, so you have Social Security piece, whatever. You have the Fed. You have all these different things, right, that are holding these mutual funds. You cannot trigger a refinance too soon. They need to keep cash flow coming in, because we are in way too much debt. Too important for them. That's why. So I think everyone's been talking about, oh, that's annoying. I'm annoyed with this. I'm like, you're not fully understanding the bigger picture here.
Yeah.
The bigger picture.
Yeah. No, you're highlighting a really important mechanical point in the formula of what's going to make things.
This is my.
No, I think you're onto something there though too. Well, no, I think you're onto something there too. And then I also think, if I'm going to go down that same kind of thought path, that might be also why the president is trying to get so many countries to commit to investing in here, to have a relief valve on this side so that they can advance a possible refinance. And so it's not as much of a detriment. So if I can bring more money through the front door, then I can allow a little bit to go out the back door. As long as what's coming in the front door is a lot more than what's going out the back door. So if there's some like equilibrium in that, then I think maybe those things might be at play behind the scenes, over there down in Hall H or whatever they're at, wherever they're at.
No, I think that's the right guys to look through it, because this is exactly the feeling we're in right now, which is uncertainty.
Yeah.
Right?
Yeah.
We don't really know. There's ideas of what we think is going on, and I do think that's an educated decision. Is to think, if you follow cash and follow the money, it does make a lot of sense.
Yeah.
It does make a lot of sense. It doesn't mean there's not people going to be hurt along the way, that people can't, but
yeah,
that's how they think things go.
Yeah. Right? Yeah. Man, I didn't know we were going to go there, man. This is great.
I like that stuff. So.
I love it. I'm so glad you're here. I've been like, didn't look at the time. I didn't know how much time had passed, man. This has been so wonderful. Cool. I have like even more questions, but I don't want to keep you any longer, but I'm so grateful for you coming onto the show, and for Jesse introducing us, and
me too.
And it just warms my heart to know that someone who is important in my life too. So that was super cool, and I'm also excited because I feel like this is also just the start. I feel like there's more stuff we're going to be talking about off camera and in life and all that too. So thank you so much for coming in. For everyone who may want to follow you for more, we'll put your contact in the description box below. But what's the best way for people to reach out to you if they want to ask a question, get involved, find out more about how they can either invest or learn and all that? What's the best place to start?
Obviously, at this point, everyone's on social media, so you can find me on Instagram, my first and last name. I've started a membership on my website, and the reason why I've started that is because it's like $29 a month for people to actually come and do a forum and ask questions. It's like, and it's a closed, but it's kind of like a Facebook group, but paid for, I guess. But you can subscribe to that, and you can ask questions. We can answer them. A different topic, but I also think, we could talk offline about it. But I do think because of AI, you're going to see a lot more paid stuff becoming educational, because it's too easy to get free stuff. So like we're doing more paid stuff. We started doing that anyway, but like I think it's helpful, and we can give people real life advice on stuff and help them out.
And so what's that website?
It's resolutionvc.com.
resolutionvc.com. So we'll put that in the description box below, as well as Daniel's Instagram handle. Daniel, thank you so much for coming to the show. I sincerely appreciate you giving all this time and all this knowledge. I've been very much educated in this conversation today, as much as I've been entertained by your answers. So thank you for bringing a lot of value to me and also to our audience. For those of you who are finding us for the very first time, please go ahead and like the video, subscribe to the channel, turn on notifications, all the same things you're supposed to do when you like people online. We appreciate you being here. And if you are not yet subscribed to our regular Mortgage Heroes weekly talk show, make sure you check that out here on YouTube as well. But Daniel, thank you so much for coming to Friends of Mortgage Heroes. I sincerely appreciate everything you're doing for real estate in San Diego, and I'm optimistic about the future. To end on a sentimentality part, I am optimistic about the future of real estate in San Diego, and I'm optimistic for all of you watching as well. So Daniel, thank you for coming to the show.
Yeah.
Everyone watching, thank you for joining us this week, and we'll see you with another great guest next week.